Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 263 on 19th of July. And where is this market headed? So we are going to discuss the chart of Nifty. Very recently, there were a lot of calls in the market for much lower levels, but market seems to have stabilized and actually going up. So we'll take a look at various factors that are playing through. In terms of the market today, the market continued the uptrend as started yesterday. Real estate going up 2.5%, banking picking up 2.2%, and most other sectors up between 0.5% and 1%. Only pharma and FMCG, just like yesterday, being the soft sectors here. So overall, it has been a great week actually, with real estate picking up 4.5%, autos picking up 3.5%. Metals also picking up 3.5%, and the month overall is looking also quite good from the perspective of the market. So a really good last 1 month for most sectors. In terms of the broader indices, small caps were doing quite well today at plus 0.84%. Mid and small cap index also up similarly. Nifty Next 50, CNX 500, CNX 200 and Nifty were up in the range of 0.4 to 0.5%. In terms of weekend investing performances, there were some good performances from NNF 10 plus 1% and MI-ATH2 also up 1%, MI-30 and ATH was up 1.202% and ATH2 up 0.78%. So reasonably good gains here as well. Some strategies did not move today. MI-20 was one of them, and MIMT all cap also, due to the large cash, has been very slow. Heatmap for the day, Reliance up mildly. You saw good traction in cement, Ultrasemco, Grasim, some metal stocks, Tata Steel were up. Some auto stocks, M&M was up, Maruti was flat. FMCG, as I said, was flat to down. Banking was good, with Axis Bank up to nearly 2.5%. ICICI Bank, State Bank also doing quite well. So overall, a reasonably good day there. In terms of the top 500 stocks, Tube Investments up 12%, Dilip Buildcon and Advanced Enzyme up 7%, GE Shipping and PCBL also up nearly about 7%. On the losing side, Alok Industries, Schaeffler India, Edelweiss, Ratnamani Metal and Grindwell Norton were the ones that have fallen. So the topic for the day is where we are headed. And a month ago, probably third week of June, when the market was near 15,000, there were so many market calls for market is going to 13,000, 14,000, 12,000, so on and so forth, and a major recession is coming. It may still happen. I'm not saying that may not happen, but and now we are nearly at 16,350 and people have started talking about 17,000, 18,000, etc. So what I'm trying to say here is that really nobody knows where the market is going. And while you can guess, and sometimes you may be right, sometimes you may be wrong, but that doesn't help anybody. And if you are right 2 times, you tend to believe that your calls are on the dot and you'll bet your house on it. So that's not the right way of doing it, especially in our kind of investment strategy and style, where we allow the market to tell us where to go, what to do, when to buy, when to sell, so on and so forth. So use a strategy, whether momentum or otherwise, and let that framework guide you whether it's a good time to buy, whether it's a good time to sell, how much to buy, how much to sell, so on and so forth. So that's the short message that was there today. I also wanted to show you a chart for the Nifty. Let me just go there and show you a chart of Nifty. So this one you can see is the fall from the COVID crash. So pre-COVID we were at about 12,500. Let's say 12,500. And what has happened since COVID? We are now almost 2.5 years post that event. If we were to assume that pre-COVID markets were at a reasonably rational level, not very overpriced, not underpriced, and on average Nifty, let's say, if you're growing 6-7%, Nifty moves up 10 to 12%. Nifty were to move up about, let's say, 11-12% per year on average. So this 2.5 years, we would have moved up about 30% from that level. Just this is a hypothesis or conjecture, you may say, that had COVID not happened, where would have been the Nifty in case everything remained sort of hunky-dory, the way, at least the way it was before COVID. And I'm not even taking into account the fact that there's huge amount of money printing all over the world. So the money base has gone up dramatically, maybe like 30-40% up or maybe more. That itself should have lifted all the asset classes by that much. So a 30% gain from 12,500 would bring you to somewhere near the current levels. I presume 30% would be about 15,800, 900, something like that. So if the demand is back to normal and we are going to grow 6, 7, 8% here on, then I think we are not too far at least from a normal level. So while this entire rally may still seem to some that we have to come down and we have to nullify this entire gain, that may not happen. We may just start going up from here and 2 years later we will say that okay, 2022 June was the best time to buy. That can happen. So don't make this mistake of having all these biases that market went up so much in the last 2 years, so it has to correct. There's nothing like that. A lot of times, a lot of studies on your, whether it is P ratio or whether it is some other earnings ratio or some other earning based, growth based, or some comparative to other emerging markets, all that just goes for a wash when liquidity comes in. If FII tomorrow starts to pump in 5,000 crores every day, market will go to 20,000 in no time. So allow the market to tell you when to buy, when to sell, create a strategy around it in such a way. And you can see this is the 200 DMA. I've plotted weekly, so it is 40 MA. But so you can see that we are still in weak zone. We are not yet in the above the 200 DMA zone. But nevertheless, we are not so far from it also. So it does seem like that we are going through a time correction, and the time correction is almost 10 months in now. Usually these type of corrections usually last between 6 to 18 months. So we are almost halfway through the longest one that we've seen recently. So there's not so much despondency at this point from my point of view. You should invest, you should add, and you should remain optimistic and hopeful for the coming time. So that's all the message I had for today's Daily Byte. Thank you so much for watching. Do remember to share this with your friends who you think can make some use out of it, and do give us a thumbs up if you like the content and subscribe to us. Thank you. Bye.